Euro dollar daily forecast, January 5th, fxempire.com. The euro dollar fell again on Wednesday as the risk appetite was fleeting from the Tuesday rally that we saw on this candle. As you can see, I have a daily trend line drawn on this chart, and it does look to be like we basically went up and hit that and came back down. Should also be noted that the 130.50-ish level, actually we topped out at about 75 maybe, 130.75, is the start of massive resistance. So essentially we had a nice bounce on low volume that failed right at the first sign of serious resistance. The 130 to 129 level continues to be resistive, so we expect a bit of a chop back and forth at this point in time. The non-farm payroll is coming out on Friday, which tends to make these markets a little bit on the quiet side. We think that selling rallies at this point on the short term is probably going to be the best route to go, as we just haven't seen the breakdown yet. And in fact, if we could get below a daily close below 129 and ideally below this hammer candle here, we would be more willing to sell this pair a little bit more hand over fist, as it were. In the meantime, though, we do have to wait to see how it will react, but rallies have been treated with suspicion so far, and each time they've been found wanting. Look to the smaller time frames, which is something we don't say much, but that's probably the route to go, at least the easiest route to go in the short term, as we do not expect big moves, at least until non-farm payroll comes out. And even at that point in time, we don't know if that's going to be catalyst enough to move this pair by the end of the session.